There we go. All right. Well, good afternoon, everyone. Hope that you are well. I know I was on the powwow trail. I went to Onion Lake Powwow in Saskatchewan on Sunday. So I feel like I've just recovered from that a little bit, but my spirit feels full. It's always good to hear those drums and see those dancers. It's just such good medicine for the soul, but also to be part of community. So welcome, welcome. Hope that wherever you are joining in from today, that the sun is shining. And I'm talking about the metaphorical sun. You find some sort of sunshine in your world today. So my name's Michelle. I am joining from Amiskwaciwâskahikan. That's Treaty 6 territory here in Edmonton, Alberta. We got some, smoky, hazy day out here. So it doesn't feel like the sun is there, but it is there behind those clouds, behind that haze of smoke. So we just give thanks to Creator for the gift of another day that we can be here, we can breathe, we can move, we can, now be in community, that we have capacity to walk out, the dream and the passion that we hold in our hearts, which is why I'm super excited for today's presentation, because our guest speaker holds a passion and a dream, and she has amazing knowledge around finances. And so we're going to listen to a great speaker this afternoon. So we're so thankful for that. So just a little bit of housekeeping here. There will be an evaluation link sent to you at the end of today's presentation. We invite you to fill that out. Your voice is really important. And when you fill that out, your name will be entered to win a draw. So there's going to be 2 $100 Visa gift cards. So if your name gets drawn, if you get chosen, you will get to you will receive one of those gift cards. So please, please, please fill out those evaluation links. We'd love to hear from you. And I believe the draw is made on Friday. So if you do win, you will hear for sure by Friday if it was you. So good luck to you all. There will be an opportunity for question and answers after today's presentation. So feel free to, unmute yourself, use that chat box. We would love to hear from you. I think it's an opportunity to have that conversation, to ask those questions. Chances are, if you have a question, you're not the only one. So we would love just for you to ask those questions, even bring in your comments and share your knowledge as well. But if you have something pressing throughout today's presentation, put in the chat box. I absolutely will make note of it, and we will get to it, definitely. So today's speaker. So I got to listen to her. I did last month, and she is a dynamic speaker. I walked away with a lot of knowledge. So we have Cate Morris joining us. She is from the George Gordon First Nation, and she's a sole proprietor of Scout Financial Solutions. This Indigenous money scout, she walks the talk. So she's going to share what she knows. She holds a business administration diploma, a business administration degree, and 2 certified financial education instructor designations. She also possesses many personal finance, procurement, and small business course certifications that support her professional and personal objectives. So Cate supplements this formal education by drawing from her own life experience of walking in 2 worlds. As an abuse survivor, homeless teen, struggling student, stay-at-home parent, widow, solo parent, employee, homeowner, person with a disability, displaced employee, entrepreneur, business advisor, and member of the poorest socioeconomic group in Canada's brief history, all with the intention of empowering her beloved Indigenous people through culturally appreciative financial literacy workshops. So that is a big wow right there. We are so honored to have you this afternoon, Cate, sharing what you know. So whether this is a workshop for personal consultation or maybe it's for your own business, you will be inspired to achieve financial wellness. And we don't hear that term a lot, and I think we need to bring it back. We need to bring it to our communities, to our homes, our personal lives. Being financially well, that should definitely be a goal of all of ours. So in this workshop, so I'll just touch on it a little bit, and then I'm going to pass that mic over to our guest speaker. In this knowledge sharing session, Scout Financial Solutions discusses vital information that many entrepreneurs tend to overlook in their business planning processes. While knowing business components such as break-even points, sale projections, and bottom lines are important for successful business management, it is also critically important to address personal finances from an entrepreneur's perspective. So knowledge sharing topics will address the income-based personal budgeting, addressing healthcare needs, insurance considerations, and retirement planning, which is I was just talking about this the other day, that retirement planning is really, really important. So we are just honored to have you here, Cate. You're gonna help us to look at our financial wellness, giving us some tools, inspire us. So we invite you, we're gonna pass this virtual mic to you, and welcome. So everybody who's here, whoever, and if you're listening, if you're watching this on the replay, that this is an amazing speaker. You can hear her passion in her presentation. So we're honored to have you here, Cate.
Thank you so much for that wonderful welcome, Michelle. And thank you everyone for coming online to share some time with me today. I'm just going to share my screen because of course I like to do my little PowerPoints, right? So let me share the screen and find my PowerPoint. There we go. And maximize the screen. I'm not one of those, oops, let's go back to the top here. Oh my goodness, I'm so sorry, you guys. It didn't go to the top. There we go. Ooh, sorry, glitch right away. Okay, so welcome to Incorporation U, Personal Finances and Entrepreneurship. I'm Petu Washte, which means good day in Dakota. And I just wanted to say it's a good day to be Indigenous. That's what John Trudell said, right? And I just love that. It's an opportunity for us to really feel empowered and wonderful in being here. So welcome all. And I just want to thank you for being a part of the wonderful things we're trying to accomplish here today. And there we go. So land acknowledgement. I am coming at you from what was once known as Pile of Bones in Treaty 4 territory. That's right, that's Regina, Saskatchewan. But I want you to know that it's all traditional and unceded Indigenous land. So feel free to be your authentic, brave, creator-blessed self in this safe space. So here's a little bit of her story. I didn't go into detail about some of my struggles and challenges, but I've been through a whole lot of life experiences, and that included a lot of tragedies and loss, a lot of crises and struggles in so many different ways. And those crises and struggles also tended to arrive financially as well for myself. And some of the struggles that I endured and struggled through from being 15 and a half and homeless, carrying forward from that period of time, I realized that when I was trying to manage with resources, my circle of influence, my elders, my family members, community members, my support systems were unable to provide the level of money knowledge that I needed in order for me to be financially well. And I felt incredibly vulnerable and alone. And then I kind of started thinking, alone, surely I cannot be alone in this as an Indigenous person. We must have a lot of commonality in some of our struggles and challenges. So my biz story is that I realized many of our people have encountered traumas and the financial hardships that follow. But I also recognize that there's just a huge gap between what our Indigenous people know about money and what we need to know in order for us to make solid, healthy decisions with our money and our resources to support us. So I created my by Indigenous, for Indigenous financial literacy business, Scout Financial Solutions. So I have been studying personal finances for more than 20 years. My journey into personal finances most definitely started out of necessity, but I quickly grew to love learning and sharing good money-related information with membership and community and friends and family. So much so that I actually obtained 2 certified financial education instructor designations. And I have been on a matriarch mission to end cyclical poverty, one inspiring sharing at a time. So thank you for being a part of this today. So Penny, for your thoughts. Michelle had already given the call out to introduce yourself or share anything, but I'd like people to be able to engage. And normally in a personal setting, we have this opportunity. We do have time restraints, and I know that everyone's quite busy with their personal professional lives. So by all means, I want to invite you to share anything about yourself, your name, where you're from, anything interesting about yourself, any type of business information or links in the chat box as we proceed through today's session. So, and thank you for sharing for those who are so inclined to do so. So, okay, are you ready to get in the know about your dough? Because today's the day. Let the knowledge sharing begin. So before we start talking about money issues and money talks and thoughts, I wanted to share with yourselves that this trigger warning, because sometimes talking about money can sometimes cause us to feel, think, and respond in unexpected and different ways. We may feel sad or shameful or guilty. Sometimes we feel remorseful about some of the things that we've done with our money, and we feel overwhelmed if there's a lot of challenges and a lot of competing interests for our money. Sometimes we feel embarrassed by some of the things we did when we didn't know what we needed to do. I feel helpless and hopeless. There's anger sometimes, and there's a lot of other emotions that may arise when we have talks about personal money management. We also may think that we are alone in this, or that no one knows and no one understands. Or sometimes, I know for me, this was entirely true. I felt deserving of my struggles. That's what trauma-based thinking and feeling and emotions and response bring out. So I felt like I deserved to struggle, and I felt that things were our fault, entirely our fault. And we also may respond by withdrawing or disengaging. We may redirect things. Sometimes we tend to avoid it altogether. And sometimes there's some blaming that is happening. But I just wanted to share with you before we carry forward that no matter what you're feeling, no matter your response, no matter what it's triggering, that's perfectly fine. It's okay. Because sometimes life happens. I know for myself, there was some illness that caused some money troubles, job losses, separation, the loss of loved ones, all of those things. Sometimes life just happens, and it tends to affect how we have to manage or mismanage our resources, including money. Again, sometimes we just need to know what we need to know. And sometimes there are outside forces that caused our money struggles when we think about the historical content of this nation and the relationship with Indigenous people. I know in my circle of family, money is only 60 years new to Indigenous people in terms of personal accumulation and management of it. So, you know, there's been a lot of challenges. We don't have the time to go into a lot of the details, but I just wanted to be able to share with yourselves that if you end up having these emotions or thoughts or feelings or responses, it's okay, because we don't want you to live in that space. We just want you to understand that there's options. So as we proceed with money management, I want you to remember this. Money skills have very little to do with our capabilities or our worthiness. We honestly just need to know what we need to know. And you're going to hear me say that a couple of times because that's so important. I love these 2 statements. You are the dreams that the old ones dreamed. That hangs in my son's room because it's an encouragement for him every day to remember that there was some who walked before us, and that we need to live in honor, respect, and dignity for their efforts, their sacrifice, and their contributions to our existence today. And the other one I love is so prevalent in Indigenous community. Some of us are building from scratch. No inheritance, no connections, no backups. Just blood, sweat, and skills. And this speaks so loudly and clearly to those with an entrepreneurial spirit. So what is financial literacy? The definition that I've used in hundreds of my workshops is possessing the skills and knowledge on financial matters to confidently take effective action that best fulfills an individual's personal, family, and global community needs. Right. So those are the reasons, like, I love this definition, and if you Googled what is financial literacy, you'd come up with hundreds of different contexts to what financial literacy is. But the reason why this one really spoke to me is because it actually has a connection to Indigenous continuity and Indigenous wholeness, right? We don't just ever think for ourselves. We always think of ourselves and family and community, right? So I thought this was so relevant to a connection to our Indigenous identity. So what is entrepreneurship? Well, the definition that I found that I thought was relevant was the activity of setting up a business or businesses, taking on financial risks in the hope of profit, right? Straightforward, pretty plain, pretty direct, but accurate. Now, this is what entrepreneurship looks like to me. We see all of these people in an Indigenous community stepping forward out of the shadows. We've always been creative natives. We've always tapped into resources. We've always been resourceful, repurposing, utilizing things as best we can. And that's kind of how I see entrepreneurship, because some of us may never ever fit into a Monday to Friday 9-to-5 corporate culture. But that doesn't necessarily mean that you're not an entrepreneur and that you're not capable of building up resources for yourself, your family, and your community. So I love this image. I think it's so fantastic. So becoming an entrepreneur, a lot of times I find they overlook some of the components in the personal finance perspective. We'll talk about things like the break-even point and the loss leaders and all of those different things from a business perspective. But what we really did when we started going into entrepreneurship is started generating revenue for personal growth, personal wellness, financial wellness. So some of the things I think that are really important as an Indigenous entrepreneur to discuss and consider while you're growing your business are income-based budgeting. And what that means is that instead of just creating a standard budget or not operating from a budget whatsoever, if you have an income-based budget, that's going to help you manage your resources so that you can still meet all of your needs, some of your wants, your business objectives, and managing it based on what your business revenue is. We need to talk about some of your healthcare needs, because as an entrepreneur, you no longer subscribe to a workplace healthcare plan or any of those types of things that are available to employees, right? You end up becoming your own employer. Retirement planning. I know some people are just starting out in their business journey, but I think it's important that we start talking about what the future may potentially look like for yourself. Insurance needs, right? A lot of times this is overlooked for a lot of different people from a number of different walks of life. So it's so important that we start considering some of these issues. And we need to talk about things such as wills and other important documents that are help us manage our personal finances and affairs effectively. So number one, let's talk about income-based budgeting. I actually have a number of different workshops on creating a personal budget and a business budget. Essentially, there are 4 components to a personal budget. And the number one are the must-pays, everything that you have to absolutely meet. And that is all your bills, right? To keep, the roof over your head and food on the table and clothing on your back and all of those things. Those are things you must take care of. And any type of debt obligations that you've committed yourself to has to be included in the number, like the first group that you must pay. The second area of creating an income-based budget is your short or midterm savings. And I always use an emergency fund for this example, and as an example for this, because it's so important that we have something to fall back on. And we just all came through that horrible experience with COVID where people were losing their jobs and getting laid off and reduced income and challenges. Now, if they had created or started working on an emergency budget, that would have been able to buoy them or help them through some of the leaner times until things had been sorted out financially, income-wise. So it's so important to have short or midterm savings for those just in case times. The third quadrant is meaningful savings. And meaningful savings are things that you're looking at in terms of a longer term. It may be maybe to consider purchasing a home in the next 10 years, or to actually buy or build a brick and mortar for your business. It could be your retirement, some of the things that we've kind of mentioned about personal entrepreneurship or personal finances. So anything that's longer term and more meaningful savings is important to have that area covered as an entrepreneur with your revenue, your income. And the fourth quadrant is everything else. That's life. So those are the things that you, they're not must-haves, they're not must-pays, they're not must purchases, but they're things that sure brighten up our lives a little bit. So it might be that coffee that you enjoy every day. It might be that treats for yourselves. It might be a bit of travel. It might be your pets, all of those types of things that add some value, additional value to your life, but are not necessarily must-pays at this point for yourself. And when I teach personal finances and budgeting, I always say it's so important to keep it 100 because our ancestors always utilized, I come from the Buffalo people, right? We're a First Nation from the prairies, and our ancestors utilized 100% of the buffalo. They didn't waste anything. They repurposed some of it, which would be considered savings. They shared, which is, donation, generosity. They celebrated. They did a lot of things with the buffalo to be able to ensure that their families, their communities, and themselves survived. So think of your dollars, your income, your revenue as the new buffalo. So utilize 100% of it in the best way possible. So this is kind of an example. I do actually have this blank sheet here. So basically your budget is your income, which is equal or greater than your expenses. You need to make sure that your cash is flowing in properly. You need to be able to manage that. You need to have some dates involved in that to be able to have a healthy budget for yourself, not to run into financial struggle or trouble. So in terms of income fluctuation as an entrepreneur, where your budget is supposed to be created from your income equaling or being greater than your expenses, one of the challenges that entrepreneurs tend to face is how to budget when some months earn less or more revenue than other months. So a couple of things you can consider. Number one, create some budgets based on your average of several months of revenue. For example, consider the last quarter, the last 3 to 4 months. Look at the income that you earned from your business and create the next 3 to 4 months of expenses and budgets based on that. Another thing you could consider is creating your budgets using the worst case scenario. For example, that's your lowest revenue month. So if you do a lot of sales and a lot of business in December and January is kind of quieter, consider creating your budget based on the worst case scenario. In so doing, you're able to have surplus months in the future where you're actually earning more than your worst case scenario. When that happens, tuck that money away into an account somewhere so that you can draw on it to meet your needs for this quieter, the lower revenue months. Yeah, little guy with the thumbs up there, he's so cute. There we go. So number two, another thing that we need to consider as business entrepreneurs, business owners, is our healthcare needs. We do know that there is some coverage according to our status and the coverage that was an agreement with the Medicine Trust in the treaty agreements. However, we do see that there's been clawback and challenges to that. So as Indigenous people, as people or Métis or Inuit people who have challenges with some of the coverage under the Healthcare Acts, you need to be able to cover your personal or family related health needs. So some of the things I recommend is consider if you're still permanently or full-time employed somewhere, check into the portability of your current employment plan. Go to Human Resources and find out if you're able to move that current healthcare plan forward with yourself. I know that for myself, when I was medically retired from the federal government, I had the option of continuing on and paying into my healthcare plan so that I can have coverage in my retirement years. So that's something that I chose to do. Another thing is look into group plans available for entrepreneurs. So there are some organizations that will try to help entrepreneurs collectively to create group healthcare plans for themselves. Look into private healthcare plans for yourself as well. So anything that has, and we see some of them are advertised in social media and in other media sources. So just it doesn't take much time to give them a call and check into them and see what they require, how much it costs, and what the benefits would be for yourselves as a business owner or entrepreneur. And number 4, this is something that I really subscribe to, is self-funded savings. Right, and this is for you to be able to cover your healthcare needs. So what exactly is self-funded savings? Well, for myself, I'll use me as an example because I am one of those money scouts that likes to walk her talk. I have e-savings accounts, and what they are is they're free. There's no service fee for myself to utilize the e-savings accounts. It is tied to my regular bank account for my financial institution. It does pay a minimal of interest rates, so it's not really an investment fund per se. It's more of a holding account for yourself with a little bit of interest for the balance. There are a few no limits to your account activity. And really the only exception to no fees is that if you withdraw directly from your account rather than transferring it to your main account, then there would be a withdrawal fee for that. So how I utilize an e-savings account for my self-funded healthcare savings is every month I do an automatic deposit to that account, and it supplements some of the coverage that isn't fully covered anymore. So my glasses, for example, my healthcare plan provides a certain dollar amount, but there's always something extra. So I utilize my e-savings account, and it's just an automated savings so that when I have a need for my healthcare, I'm able to withdraw from that. So number 3, retirement planning. So the challenge, you've launched and business is thriving. Congratulations. It may seem out of place now, but what are you doing for your retirement goals? And I love that, the time and the compound interest little picture there. Some of the things you can consider as an entrepreneur, business owner, is the portability of your current employment plan. And that's the same as it went with your healthcare plan. If you're currently employed, actively employed someplace else, someplace right now, as you grow your entrepreneur side hustle or business, contact HR, see if you're able to transfer the pension plan to yourself or to another institution. Also look into group plans that are available for entrepreneurs. Again, there's a lot of entrepreneur-based programs and entities that have access to information for that. Check your CPP, which is your Canada Pension Plan contribution room to date. Your contributions would be able to provide, they're able to give you a statement based on your contributions to give you an estimate of how much you'll actually be withdrawing when you start withdrawing it, whether you decide to start it at 60 or 65 or later. They do have kind of an estimate tool to help you out with that. So that helps you with knowing where some of your income will be coming in from. Another thing that is important for entrepreneurs is to check out your RRSP room, your Registered Retirement Savings Plan Contribution Room. And that appears on all of your tax statements. So at the end of filing your tax return and they give you your assessment back, there actually will be a statement saying you have X amount of dollars in your RRSP contribution room. And again, there's that wonderful self-funded savings. So just to kind of go into a bit of detail, the Registered Retirement Savings Plan, which everyone calls an RRSP, is a tax deferment. It's not exactly tax exempt. It does provide an income tax income tax incentive though. So what it does is it actually deducts from the taxable income that you've earned until you've withdrawn it. So it reduces kind of your taxable income. And then that stays at that taxable income until you actually withdraw from the RRSP. There are contribution room limits. Like I stated, there's previous tax returns that will give you the amount that you're allowed to contribute up to. And they come with as a basket of investments. So it's not necessarily, it's called an RRSP, but there are a number of different investments that sit inside of that, like a guaranteed income certificate, savings funds, mutual funds, all of those types of things that sit inside that basket for your investment. The other thing that you can consider is a tax-free savings account, the TFSA. So this is entirely 100% non-taxable, regardless of how much you contribute, how much you earn. When you withdraw it, it's all tax exempt. So it does not provide any type of income tax incentive per se, other than the fact that the activity is all tax exempt. There are contribution room limits from 2009 to 2020 was 69,500. So if you've never contributed to an a tax-free savings account, as of December 31st, 2020, you had 69,500 to contribute. So they've actually increased and changed the value almost every year. So you'd have to check with your financial institution to confirm how much room you have in your tax-free savings account. Again, like the RRSP, it's a basket of investments. So there could be a number of different things that you would buy into, I guess, so to say, to be able to grow some interest revenue from your investment. The difference between a tax-free savings account and the registered retirement savings plan is there actually is no specific goal for the tax-free savings account. You can set your own goal. So with a registered retirement savings plan, it's specifically for retirement. There is a home buying program that allows you to withdraw from it to be able to make a deposit on a home purchase. My concern a little bit with that is can you make the retirement plan repayment along with your mortgage and all the other obligations as a homeowner? So be careful, make sure you run all the numbers when you're considering that plan. But with the tax-free, you can use it for any savings goal. You can utilize it for retirement. I know I actually have two RRSP tax-free savings accounts, and I utilize one for long-term savings, which is retirement, and the other one I utilize for shorter-term savings, which is savings for my next vehicle. So it is important to note when you're starting to get into savings and investments is that sometimes there are investment advisor fees involved. And those can be salary, flat rate, hourly rate, commission-based, percentage, or a mixture of various types. So be sure to ask the question, how will you be compensated for investing on my behalf? And we ultimately want your money to be able to grow in a good way for you because this is long-term savings, right? So number 4, insurance needs. So the challenge, I've never considered insurance before. What kind of insurance should I consider? Well, there are a number of different types of insurance policies and plans that people need to consider in order for them to have security and stability in their personal finances. So different types of insurance. Automobile insurance, I'm sure most people are familiar with that, whether you have a package policy or a standard auto insurance coverage. Property or home insurance, whether it's your brick and mortar building of your business or your home, or if you're renting, there would be something called renter's insurance so that it can protect your assets that are inside and contained inside the property. There are professional and business liability insurances. Depending on the type of industry that you're in, you may be required to purchase those types of insurance to protect yourself as the business owner and to protect your business assets. There's disability insurance. I know a lot of people are not familiar with this, but it's something that people, honestly, we just never know what can happen. For myself, the morning that I woke up, I had no idea that was going to be the last full-time day at my place of employment. I just thought I was going to work there and retire. So a lot of things change because of a near fatal accident, and those types of things happen. So when I speak about insurance and coverage and the importance of taking care of yourself, I speak from a personal place. Critical illness insurance is another thing that people should be considering. And of course, life insurance, right? That's a critical thing because you're starting to, if there's anyone who's dependent on you. I remember being in this workshop, and I asked everyone to raise their hand if there's anyone that they was dependent on them or had their favorite aunt or a mother or a niece or a child, and everyone raised their hands. And then I said, so how many of you actually have life insurance policy to protect them in your absence as the income earner? And almost all the hands went down. And I thought, yeah, we need to talk about this kind of stuff more, not because we're morbid or not because, we want to face that, but by all means, it's a discussion that needs to be had and considered because we all have somebody that loves us and is dependent on us. So, which brings us to the next topic. Do you have a will? So the challenge, you have been working hard and growing your business and personal assets, but you're unsure how to keep it in the family. And especially for Indigenous people who die without a will, who pass on without a will to the next life, there's a component of the Indian Act that makes it a challenge for Indigenous people to actually try to claim their assets without a will. There's a process that makes it cumbersome and challenging time-wise for your estate, your loved ones, to try to go through that process. So if you had a will, then that would be clearly written out for anybody that you love and that you'd like to leave something behind. So consider making a will to ensure your personal wishes are known and understood. And it is, again, an important consideration for those who have businesses and who are growing assets. The benefits, well, it gives you and your loved ones peace of mind. It reduces risk of conflict. Sometimes when people say, well, Cate wanted me to have this, or Cate wanted me to have that, we just kind of have it laid out very clearly and specifically so that everyone's okay with Cate's last well wishes. And it's so important, especially if you're in any type of a business partnership or contracts, because we need to make sure that your needs and your wishes are known beyond your time here. So that brings us to some important papers that we need to be able to manage, because we're doing all this wonderful planning and all of this wellness, like financial wellness gathering, right? So I always tell people it's so important that you consider creating a physical folder or binder of important papers. And the reason why I say a physical folder or binder, by all means, have an electronic copy, but it's so important that you actually have a physical folder or something that somebody could pull in the event of an accident. I know for myself, again, the challenge was that I needed to make sure I still managed my personal affairs. I was a solo parent with 3 young children, my oldest 16 at the time of my near fatal accident. And I'm so lucky that we actually had something called a budget binder that she was able to kind of, tap into for me, so that she was able to kind of help manage the household stuff while I was dealing with fighting back for all that challenge. So in your folder, make sure that there's a copy of the will, a copy of any type of ownership documents of any assets that you may have, whether that's an auto or a brick and mortar building for your business. So you want to make sure that your personal and your business affairs are all contained in there. Any type of insurance policies should be contained in there. A copy of anything really that will add to your family's well-being or your business affairs. Like even for myself, I even have my collector miles information in there and whatnot, because I've earned those darn things and they should go to who I need them to go to. So where are you going to keep all of this stuff? Well, first of all, when you have the physical folder, make sure you tell others where you can find it. For myself, everyone in my family, my loved ones, my circle of support is aware that there's this wonderful folder, and it's in my favorite color, which is purple, and it actually is marked Level Heaven, so that they all have to just pull it and all the information is there. And having been a young widow and having lost my mother, I cannot speak enough on how important it is for you to be able to support your loved ones in the event of your untimely passing. Because for myself, I was overwhelmed with littles and I was a young widow and I just didn't even know which way was north at that point. So it was a challenge for me. So as soon as all of those things cleared up, I started making my folder, because I just didn't ever want to see my loved ones having to go through the grief, the loss, and the overwhelming sense of misunderstanding of personal affairs and whatnot. So again, I have a nice, wonderful, bright folder, and it's called Level Heaven, and it's just something that gives them peace of mind and myself peace of mind. So that's Incorporation U. If you follow these 5 personal finance tips, you will be well prepared for any of life's surprises, both personally, that I've spoken to and alluded to a couple of times in our conversation here, and also as you move forward with your entrepreneurship. When we think about the pivot that people had to go through with COVID and how they had to adjust themselves very quickly on the fly, and if you're well prepared, you won't have to go through that process. You'll actually have a pivot plan in place, and you'll be able to shift up as you're able to. And I just wanted to add a few other little points here since we have a few more minutes. I like this picture. Keep going. Everything you need will come to you at a perfect time. I absolutely love that. But speaking from personal experiences, sometimes that just doesn't happen. So I want to share with you some lessons learned to be able to make sure that you're more prepared for anything that might happen. So when you're a business owner, you need to make sure that you have banking for two. You need separate accounts for your personal affairs and for your business affairs. The reason why, because you're actually managing two very distinct money pools with two very distinct purposes. Also, it's so important that your business has the capability to start building its credit history. Now, when you're starting to open a business, your business doesn't have any credit history. So if you need to access any types of loans, grants, credit, any of those types of things, they will look at your personal credit. But in the meantime, when you start opening your account actually is starting to build that balance for you. Other reasons, it helps to keep things separate and clear for personal and business needs, for your tax preparation purposes, any type of grant opportunities, and any other type of reporting requirements. And also just for when life gets hectic. If things get so hectic, you're not able to kind of track your one account and split through it. If you just have them two separate, it's so much easier. At least they're in their separate pots. Right, there's a happy guy, thumbs up again. Yes, Kate, yes, let's do this. So another important thing for you is to have credit for two. So if you're deciding to enter into entrepreneurship, it's so important that you start now to build up, clean up, start your credit history. Number one, on a personal basis, most definitely, and number two, on a business basis. And it's so vital to understand credit. Also, critically important to manage your credit, because we don't want anyone to be in a predicament where opportunities decline to them because of their previous history or understanding of credit, or misunderstanding of credit, I guess we could say. So again, having separate credit for your personal and business will help you manage your money. And again, why is it so important to understand, use, or build our credit? Well, simply because at some point you personally or your business may need to access it. So because we seem to be transitioning to a cashless society. So if you're on a business trip and planning to do some work away from home, you want to make sure that you're not traveling with all that cash in hand because you don't have healthy credit for your business. You actually want to be able to have a business credit card to be able to pay for all of those expenses that you incur. And again, there's a little reminder about debt, that we need to make sure we're managing your debt as well as possible. Another important component is to understand the books. So know your dough. It's vital to understand your own business, to understand your business books, to have a pricing strategy at play, to learn your break-even point, which is when all of your expenses will transition over to revenue, clear revenue. Know which products are your money makers, and if you have any lost products, meaning products that are out there, a lot of extra work, but really not generating enough revenue for you to, justify the work involved in it. You need to know your profit to your personal income, and when you're able to reinvest to your business to grow it. You need to select the right software for right now. For myself, I just utilize Excel. At some point, I know I'll have to make the transition as I grow some of my income streams. But for me, Excel is the one that's working best for me. And it's so important to decide on your team members. Of course, yourself to start. What are your strengths? What are your weaknesses? Do that inventory to make sure you're able to meet what your business requires so that you can excel in your personal affairs as well. Your tax preparer, any type of bookkeeper, accountant, legal representation, all of those things is so important for you to know who your team is. And a couple of other tips when I'm talking about personal finances and planning for your 100%, remember we utilize 100% of our resources. If you're spending over 100% of your income, you need to either A, increase your income, B, cut your costs, or do a bit of both until you're within your 100%. It's also important that you aim for more than one income stream. I currently have multiple income streams, and we saw this happening. We saw this playing out when COVID hit, because a lot of people only had one income stream, one source of income, and it really affected them personally. Not only on a financial level, but really honestly on a deeper level than that, because they realized that there was a level of dependence there. So if you have multiple income streams at play, then if something is quieter than others, the other months you still have revenue coming in from those other sources. So important to start saving, even if you're only saving by a few dollars per month. I always tell the story when I started saving, I only actually started with $25 a month in one of the investment plans that I kind of purchased into. And honest to goodness, it's just grown because time was on my hands, or time was on my side, and commitment and just consistency were at play. Manage your debt. And especially important if you look towards entrepreneurship, because you may have to incur additional debt as you grow, launch, or develop your business. Plan for fluctuating income. We talked about that a little bit and had a couple of the things you can do when your income is fluctuates on a monthly or regular basis. Know your revenue generators. Which product or which service is making you the most revenue, and also know which ones are not worth the effort or the energy required. Again, select your strong team members and don't feel discouraged. All that glitters is not gold, especially on social media. And this is something I had shared many times, because a lot of times people only share their successes and their accomplishments. A very few will openly, honestly share their struggles, their challenges, and their failures. But unfortunately, that's where the learning is. That's where the nuggets of knowledge and information are. So I'm very open to sharing some of my personal challenges, because it allows people to say, oh, I never considered that, or I never thought about that, or wow, interesting. So it's in the struggles where we learn and we get stronger. And start today. Start building your today for a better tomorrow. And that's the end of today's teachings, but please do not stop your learning. Grow your abundance. Read articles and books. Subscribe to free resources. Go online. Check out Google and YouTube for personal finance, personal wellness information. Attend workshops, webinars like this one, and teach-ins. And normalize talking about financial abundance in the Indigenous community. It's such a taboo subject that it's a challenge to be able to help people step into a safer place in terms of personal finances when it's such a taboo subject. So normalize talking about it and ask others. I'm always open for a good conversation and some tea. So that brings us to kind of the wrap up of things. If there's any comments, any questions, I tend to talk personal finance in a general perspective, because if anybody wants to ask me anything specific, we can certainly do this offline, because personal finance is personal. So we don't want to open up anybody's privacy by any means. But if we want to talk about some general personal finance questions, by all means.
Really great workshop, Cate. I really love the authenticity that you bring to your presentation. You know, passion, heartfelt, great knowledge. So thank you. There are questions in the chat box right off the bat. Michael, I see your hand. We will come to you, but we're just going to go back to the beginning. This was from Cindy. She says, pensioners, we were talking about, you know, saving for your retirement. So her comment was, pensioners' money planning is important, specifically if most of the employment is on reserve and don't need to pay into CPP or taxes. It would be an idea on how much we would pay, how much we would be expected to save to survive retirement years.
That's such a good point, and that's something I didn't have opportunity to when I do the whole retirement and the fluctuating income and some of those discussions. We get into more detail on that, but I always tell people that's why I always include the self-funding, because if you're for First Nations, it's optional to pay into the Canada Pension Plan, and a lot of times employers will either do an all-in or an all-out. So if you're an Indigenous person and you want to contribute, it's a challenge for you to be able to say you want to be the one person at that Indigenous entity to pay into it. So that's why for myself, I say it's so important to self-fund yourself. And that's where the tax-free savings account comes in. That's where the RRSP comes in, or any type of other saving vehicle for yourself to contribute an equivalent to what the CPP contribution would have been on behalf of yourself as a CPP contributor. So that's important to look at that. When you retire, there's going to be a couple of sources of income that may kind of offset the fact that you have not paid into CPP. Number one, we know that tax-exempt income is considered zero. So what that actually does when you do your tax return is you're going to have the guaranteed income supplement for old age pensioners, and that's normally set aside for people who are considered low income. So even if you were earning a higher income at an Indigenous entity, and then you went to retire and you do your tax returns, it's going to say kind of a zero. So that allows you to tap into some of those resources there. So you'll have the old age security that everyone gets at 65, as long as you reside in Canada, right? You'll get the guaranteed income supplement. Hopefully you have a workplace pension. I know a lot of times pension companies will wander around and they'll ask them if they'd like to cash in their pension early. And I say, please do not do that, because time has been on your side. You've been contributing to that pension for many, many years. And honestly, why would we want to save, that company money by cashing in the pensions? Then they don't have to pay it out in perpetuity until you're gone, right? So don't cash in your pension. Check what your pension account and balance says with your employer. Always consider this self-funding. Right? Like we think about in terms of a level of dependency or things that people are just not familiar with. It's so important that you do some self-funding and some self-care there. That's really what it is, self-preservation. So hope that helps.
Yeah, that's great. She did. I think you answered this. So she's asking, CPP without paying into it is available, was one of her questions. And then the second part was RRSPs are available if you work on reserve and don't pay into taxation. So those are two separate questions.
Yeah, so with the RRSP, if you've never had any type of taxable income source, then RRSPs aren't necessarily the best venue for you, because a lot of times the contribution room is based on your previous year's taxable income, right? So that's, again, the tax-free savings account is a good venue for a good avenue for yourself in that respect. So you don't have to necessarily pay into the RRSP and the tax-free savings account. If the RRSP is not relevant to your tax situation and your retirement situation, by all means, work on maxing out the tax-free savings account and any other type of personal pension plan that you could try to start or contribute. Yeah, I myself, I'd contribute into an RRSP still, because I had RRSP room when I retired, and I still pay into the tax-free savings account as well for long-term retirement savings. Yeah.
Great. Okay, Michael, we're gonna throw it to you. I know you made a comment in the chat box, but I'll just throw it all to you. You're on mute.
Hi, how are you guys? Sorry, wasn't sure if you could see me, but yeah, I just had two quick questions. Actually, not big deal about the one in the comment. I wasn't sure. But anyway, but two quick questions I actually had for you was specifically when you were discussing kind of entrepreneurship and more kind of like building those revenue streams. I guess the first thing I was wondering was, if you're not currently an entrepreneur, kind of what would you suggest as like I find the difficulty, I'm wondering, is so if you're working at an employer somewhere as one income stream, as you were mentioning that COVID kind of hit that, and you're trying to build up more income streams, maybe with an investment portfolio, which usually kind of takes a little bit over time, which I am doing as well. But then, obviously like real estate requires a larger investment. And then, on the personal services side, usually there's difficulty with being able to do that while you're also working full time with an employer. So I'm just wondering how you would what advice would you give for navigating, acquiring different multiple revenue streams while you're working at an employer, because obviously they don't want you to be pretty much working to other things, until the point in which you feel comfortable enough with your revenue stream can then go and you can kind of move more from your full-time into the entrepreneurship side. And then on that side, because you mentioned about reinvesting, when you're looking at your budget and you're deciding, okay, so my business is making this much money, maybe we made 20,000 last year, right? What would your recommendation be at all, or like, for reinvesting? Is it really based on personal kind of preference of your income, or maybe 10% of the profits, or like stuff like that? Like, I'm just kind of curious what you would kind of recommend as an advisor for reinvesting in your business versus paying back yourself. Yeah.
Okay, thank you so much. I love the engagement. I do appreciate this. Number one, we'll address your first question and comments. First of all, a lot of people who start into entrepreneurship or multiple income streams tend to start off as a full-time employee somewhere. And you're absolutely right, Michael. There's a challenge to your time and your energy and your capabilities to commit time to your new, they call it a side hustle, right? So a lot of people end up looking at themselves and what's your best fit? What do you know well enough that you're able to meet a need? So number one, you've got to do a bit of inventory there. What are my skill strengths? What's my weaknesses? And what type of offerings do I have that solves a problem, right? That's what entrepreneurship is. It's looking at society and saying, there's a weakness here, there's a challenge here, there's a need here, and directing your energy and stuff towards that. So that's something that's more on a personal basis. Even for myself, when I was on disability leave and I still had 100% of my income, or 100% of my financial obligations, and I only had 60% of my income because the insurers were all fighting about who was responsible for me. And meanwhile, I had this physical disability that was just putting me on my butt nonstop. I did something called retail arbitrage. So for myself, I needed to make up that 30% or 35% from, you know, my disability to my debt obligation. So I actually would go to secondhand stores on 50% off days. I would look at the high quality product because I knew clothing and we knew what people like and we're trending, right? We know what's trending. I would pick the best products that were there at 50% off. I would take them home, wash them out, list them as on consignment websites and sell them. So that actually was enough to generate enough income for me to still meet 100% of my obligations without being too taxing to myself as a person with limited capabilities then. So little things like that, because that's what I had to do, is I had to tap into, and we have to be really resourceful and say, what do I know and what do the people need? And we try to marry those up. So in terms of just a couple of extra tips, don't overwhelm yourself with it. Make sure before you launch anything, what I did was I took a number of entrepreneurs out for lunch and for coffee. And I just picked their brain and I said, if you had more time, or if you could do it over, what would you do? What would you want to have known? So I asked all these questions. So it was a really resourceful opportunity for me to say, okay, then I was able to feel more confident and comfortable in launching. So those are a couple of things I can share with you in terms of that perspective time-wise. In terms of the second component, when you were talking about, sorry, it was about investing. Was that?
Yeah, I was just wondering, like, when you had the income and because you were talking about separate bank accounts. So when you're looking at the books of your business and you're just saying, okay, I made this much revenue, this much expenses, this is my kind of profit. Is there any advice for, depending on your lifestyle or your income or your responsibilities, kind of good benchmarks for how much you would want to reinvest that profit compared to paying yourself out, I guess?
I can't speak to what everyone else would like to do. And what I think that the number one thing though is security, right? You got to make sure that you're not just going to roll the dice in something and say, this is going to be the opportunity that I'm going to put all my money on that pony for. So you got to make sure that you know your finances well enough. You got to make sure that you understand your timeline, and you have to make sure that you know what your risk tolerance is. When I first started getting into reinvesting my resources, I was really cautious, and my money didn't grow very quickly because I was extra cautious. At that point in my life, I needed that because I was still a solo parent with 3 kids that were dependent upon me. As I got older and as my obligations were set aside, I no longer had those obligations, I started to grow with my risk tolerance a bit more. And so then I'm able to sit in a place. And then the wonderful thing about having resources is that when COVID hit and the markets crashed, a lot of people bought in at that point, right? So there's that opportunity there. In terms of a business perspective and investing in my business, I still haven't identified that point yet. So for me, though, my business is my 7th income stream. So I already kind of pursued and established 6 income streams. Some of them are secured streams, others are flex streams, but this is my 7th income stream. So that I needed that security, right? And I had to, because you know, as a solo, a parent, Indigenous disabled woman in Canada, I'm supposed to be below the bottom rung. I'm not even supposed to be on the ladder. So I had to be extremely resourceful, but you also have to really take a strong inventory on yourself, your ability to risk, your ability to say, I'm going to jump in full time first. I always told people, for me, it was when I had zero debt. It was when I had an emergency fund established in terms of pursuing my business more, and in terms of me not having to take on too much personal risk. So I hope that gives you a bit of information.
Yeah, that was really, really helpful. And I think I'm really glad you mentioned that with building a risk. And I don't want to take over everybody's time. So hopefully maybe if you're willing, I would love to I'll try and reach out and maybe we can talk more, because I definitely know, like, I am in a good situation, I feel, at least in my life, where I do budget. But I know, like, Canadians, and especially me, like, I'm an accountant, so like we're very risk adverse. So I definitely feel like I need to build my revenue streams and build that kind of entrepreneurial side, but it's very difficult to kind of take that money and reinvest into something that you're kind of higher risk and you're really trying to build yourself. So really getting that perspective of entrepreneurs and how they took that journey and how they increased their risk, as somebody, as you said, who was risk adverse, especially for somebody who had a lot more kind of dependencies than I do, probably. It would be great to hear a little bit more. So thank you so much for answering those questions. I really appreciate it.
Thank you. Thank you very much.
Well, thank you, Michael, for the engaging questions. There is, right, if on your screen, you can see her contact information. You could follow her on social media. So feel free, because it's right there, to reach out, ask a question. But thank you. Our time is up. It's been a rich hour and then some with you, Cate. So thank you so much for bringing that really good knowledge. Financial literacy and wellness is something that we don't talk about enough, and it needs to be talked about. So thank you for your conversation, your wisdom, your inspiration. And thank you everyone for joining us this afternoon. We hope to see you again at Can Do Links to Learning on Tuesday afternoons. And remember, you're going to get an evaluation link. So please, please, please fill that out. It is in your best interest to do so. So take care. Have a beautiful rest of the day. May you walk well, walk in a way that honors your own spirit, that honors Creator, and honors the world around you. Take care, everyone. Peace.
Thank you.
Bye, everyone. Take care.
Bye.